Welcome back, everybody. Today we're talking about everyone's favorite growth index, the Nasdaq 100, or as many of you know it, the QQQ ETF, because believe it or not, it's changing. But don't worry, it's not anything out of the ordinary. It's the normal annual reconstitution of the index, where this year we have 3 stocks that are leaving and 3 stocks that are being added. So in this video, we're going to break down what's changing, what it means to the index going forward, and how we should react to information like this as investors. So let's go ahead and get started. This weekend, Nasdaq announced their annual reconstitution of their Nasdaq 100 index, and the 3 companies being added are Palantir, MicroStrategy, and Axon. And then the 3 companies that are actually being removed are Illumina, Supermicro, and Moderna. And we can see that the changes are going to be effective as of December 23rd, 2024. So just right off the bat, if you're an investor in Palantir or MicroStrategy or Axon, then this is generally good news, right? Because you're now going to be part of one of the more popular passive index ETFs out there, so that as that ETF continues to grow in terms of people putting their money into it, then it kind of trickles down to all the stocks in it as well. But in terms of why they made the change, I think it's important to understand how the Nasdaq 100 is actually built. So you can see that here's the criteria that they use. It needs to be a company in the United States of America. It needs to be listed on the Nasdaq Stock Exchange. And I know some people have talked about this before, but the QQQ or the Nasdaq 100 are companies that are only listed on the Nasdaq Stock Exchange. So if you're listed on the New York Stock Exchange or basically anywhere except the Nasdaq, then you can't be included. Now, they also require that they're classified as a non-financial company, so basically any industry other than financial, but they do kind of explain this in more detail later, where they say basically they're excluding banks. But if you're like an asset management firm and all that, then you're still eligible to be put into the Nasdaq 100. And then they have some other things in terms of liquidity and not being involved in bankruptcy proceedings. But then once they're eligible, then what they do is they rank them based on their market value. So in rough terms, basically their market cap. And then once they're ranked, the largest 100 companies get put into the index and then weighted based on their market capitalization. So in a nutshell, what you have is 3 companies that have done really well over the past year and are now within that top 100 rank of market cap, whereas the other 3 companies either had a poor year or just in general were smaller in terms of market cap, and now they're kind of falling out. But outside of just the numbers, let's talk about each one so we can identify what it really means to have them in the QQQ now. And so if we just start with Palantir, now Palantir is around 173 billion in market cap, and they're up over 300% over the past year. But in general, adding Palantir in the Nasdaq 100 is a bet on enterprise AI and government data analytics continuing to be a secular trend that grows. And to me, that's a pretty safe bet. Now, we can argue back and forth about if Palantir is at a reasonable valuation or not, but I think the reality is the industry that they're in isn't going to be getting any smaller, and as of right now, they seem to be the market leader. And then next, if we go to MicroStrategy, now MicroStrategy is at about 88 billion in terms of market cap, and they're up over 600% on the year, which is just insane. Now, obviously, MicroStrategy is a bet on Bitcoin's long-term price appreciation. And now people are going to have different opinions on that, or whether they think it's good or bad, but the reality for MicroStrategy is that yes, there is a data analytics business there, but it's not really a part of why the stock's performing the way that it is. They hold a bunch of Bitcoin, they raised a bunch of debt to buy more Bitcoin, and it's basically a Bitcoin price appreciation and a leveraged Bitcoin play overall. Now, if we move on to Axon, Axon's around 49 billion in market cap, and they're up over 150% on the year. And in terms of what adding them means in general, it's basically a bet on public safety tech like body cameras and digital evidence management, and assuming that that's going to continue growing, which in my opinion, I would think that it definitely is. And just real quick, if we talk about the 3 that are being taken out of the index, Supermicro Computers first. Now, they're at about a $21 billion market cap right now, and surprisingly, they're still up 24% over the past year, and that's pretty amazing when you consider what's happened to them in the stock and how far it's come down already. So Supermicro is obviously a bet on AI and specifically on server demand with their kind of innovative server solutions that they have. But obviously there's a bigger story with SMCI that we all know, and that's basically their accounting scandal that's going on. And they're actually at risk of getting delisted off of the Nasdaq, but they've recently got an extension to be able to file their documents. I don't even know what the date is. We can kind of look it up here if I can find it. So it looks like they expect to file all the required reports by February 29th, 2025. So just a pretty crazy thing because it's been like, what, since August or something, or maybe July where they hadn't filed, and it's going to be in February. So I'm curious to hear what comes out of that. But clearly, there's a lot of things going on with SMCI. It's not really a huge surprise that they're coming out of the Nasdaq 100 index when, I mean, they're at risk of being delisted overall. All right, so we go to Moderna. Moderna is down to a $16 billion in market cap, and they're down about 50% over the past year. Now, Moderna in general is a bet on mRNA technology, kind of more broadly than what we saw with the pandemic and any vaccines there. But at the end of the day, you're down 50%. You're now at a market cap that's below the top 100. Pretty obvious what's happening there. And then lastly, Illumina, they're at about a $22 billion in market cap, and they're actually up 15% on the year. And in general, it's a bet on the growth and impact of genetic sequencing, which I'm not going to act like I'm an expert on because I'm not. But here, I think it's pretty obvious, even though they've had a pretty good year, just from a market cap perspective, they dropped out of that top 100, so they're getting replaced. And so if we take a look at what we can expect in terms of weighting for these companies, this actually helps to see, okay, what kind of impact will these companies potentially have on the index? Now, if we go Palantir, it's going to be around kind of where Texas Instruments is. They're about 22 now. So I would imagine they're going to be roughly around 1% of the index. In terms of MicroStrategy, they're going to be closer to maybe say like Intel. So Intel is at about 0.5% in terms of weight, and that's probably around what MicroStrategy will be. And then Axon will be kind of more down here, closer to, say, Lululemon, which is at about 0.28% in terms of weight in the index. So that's about where they're going to be in terms of relative market cap to where other companies are at. So, you can see that if you're one of those people that are like, okay, well, I'm worried about MicroStrategy, let's say you don't believe in Bitcoin and you're like, I don't want that in QQQ. Well, okay, but it's probably only going to be about 0.5 percentage point of the index weight. So, how big of a problem is that? The answer is probably not very big. But as investors, is there anything we should be doing anytime we hear this information about reconstitution? And honestly, my opinion is that there's really not much to do. I mean, we should be buying ETFs because of the methodology that they use, not necessarily because of their past performance, right? So if you buy an ETF that says, I'm going to invest in these type of stocks, then we don't really need to get too attached to any stock that's in the index at any point in time, because we know that it can change based on the criteria that the index is using. And a good example of this was actually earlier in the year with SEHD and the changes that they made in March, because people were upset that companies like Broadcom were removed from the index. But ultimately, it didn't fit their criteria of kind of undervalued stocks, because obviously Broadcom had run up a bunch the year before. And the tough part about that for SEHD investors is because if you take a look at the performance since that change happened on March 18th, Broadcom is up over 83% in total return. And at the time that it was removed, it had a close to 5% weight in the index. So if we just do some basic estimate math, you're talking about around an extra 4% in total return for SEHD from Broadcom alone. But again, if you're investing in ETFs, then we can't really think about it in that way, because what you're investing in is the method that the ETF uses. And the only way that you can judge the performance is based on what that ETF is meant to do. But that's why I always harp on knowing what you're actually invested in and why. And of course, we mostly talk about it with individual stocks, but it applies with ETFs as well. I mean, anytime you're investing in an ETF, I highly recommend you at least go check out what their methodology is so you know how the index is constructed. I think too often we just get caught up in, hey, this is a growth index, so I'm going to buy this growth index. Or I look at SEHD and people say, well, it outperformed in 2022 or it outperformed for 10 years, but that doesn't tell you anything about what it's going to do going forward. And so it's more important to understand how it's actually constructed and make sure that that aligns with your investing goals. But just real quick, going back to QQQ, I actually like the changes personally because I think Palantir, MicroStrategy, and Axon are all part of secular trends that are going to continue and keep growing. And even though there might be some higher than normal risk with a couple of the companies, because you have one like Palantir that's trading at 175 price to cash flow, and you have another one in MicroStrategy that's pretty much completely dependent on the price of Bitcoin. But having them as a small part of QQQ, in my opinion, is a very low risk way to get some exposure to that trend that doesn't really put the total index at much additional risk. So let me know what you guys think about the changes in QQQ down in the comments below, and if you're excited about them or maybe not so much. Now, speaking of secular trends and new tech, if you missed my video on how using AI tools can help you pick better stocks in less time, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.